You are listening to ChartingWealth.com for Monday, the 14th of November, 2016. Total market a little down for the day on Friday, 0.06%, but that has not affected our candlesticks on the two-day chart as they continue to move up 3 in a row. We have a new trend line that we drew once the two-day chart crossed over on the MACD, or as we call it now, the PPO, the price percent oscillator, going up. That crossover occurred on the candle ending on the 10th. That was Thursday of this past week. We've seen in the last day on Friday, the derivative oscillator move markedly up in a continuing upward direction. If we look intraday, things look a little different. We get a better picture as to what's really going on. We saw the market top out around the 10th, and then it's really been sliding sideways since then. Still above the two-day trend line, but remember, the weekly chart is still in a confirmed down move. So we've got our medium-term trend, that is the two-day trend, going up. We have the 4-hour trend going up. We have the long-term trend going down. Looks like on the 4-hour chart, though, that we could be topping out. Let's pay attention to that this next week and just see what happens. Now let's go back to our two-day chart. Move on to check out the S&P 500 as shown by SPY. It was down considerably more for the day than the total market. The S&P 500 was down 0.21%. Again, it also crossed over on the 10th on the two-day chart, going up, still in a confirmed down move on the weekly chart. And if we look intraday, what does it look like? Well, it also topped out somewhere on the morning of Thursday, the 10th of November, and has been sliding sideways since then, still above the two-day trend line. And remember, the weekly trend line on the S&P 500 still down. So we can see derivative oscillator losing energy, and we can see that the strong up movement is slowly filtering away on the 4-hour chart. So we'll continue to see how those things shape up over the course of this next week. Back to our two-day chart, on to the Qs. That is QQQ. That, of course, sometimes called the cubes, is the Nasdaq-100. Very interesting chart. Nasdaq-100 started moving down all the way back on the 26th of August. And even though it was in a down move on the two-day chart, those who've been following us for a long time know that our weekly chart had been in an upward direction, and that's what continued. Even though we had certain lows hit, the market overall kept moving up. That occurred until around the 25th of October, when the market crossed over and started moving down after that on the weekly chart. And we, of course, had a portend of those huge down movements that occurred starting on the 27th of October, then the 31st of October, then the 2nd and the 4th of October. Now, these are our two-day candles. Now the market's been sliding sideways since then on the 4th, the 8th, the 10th, and now the 11th. So again, the Qs was barely up. We're using our Heiken Ashi candlesticks, so they don't always reflect actually what you see as far as the price numbers go, but it does affect. Remember, Heiken Ashi in Japanese means average pace. It shows the average pace of what's really going on. That's why we like Heiken Ashi candlesticks so much. If you haven't taken our training on that, you can hear it for free. You can just go to either our YouTube channel or you can go to our website, chartingwealth.com. We have it loaded up there. Heiken Ashi candlesticks. So what do we see intraday? We see that the pullback is still underway, hasn't yet crossed over going down. When and if that occurs on this 4-hour chart, that is your safest entry point. Know some of you jumped in around the 10th when we saw that big down movement starting to occur. That actually, after all the up movement, again, you can do that with the Heiken Ashi candlesticks, but that's not how we teach it. We teach it that when the crossover ends, That actually occurs when the 4-hour chart rotates over, crossing the signal line on the PPO going down. That's your proper entry point, if indeed and when that occurs. So if you don't know what we're talking about, you need to listen to our 15-minute How to Read a Stock Chart video. You get that. You get our daily market worksheet and the layout we use at freestockcharts.com just by going to chartingwealth.com and subscribing to our daily podcast. You'll get this every day, plus our weekly review and forecast we're going to do actually up next after we finish this. So we've done the Qs. Lastly, we're going to go to the 2-day chart from the 4-hour chart and look at gold. Gold down, gigantic down moves in gold. 2.23% just for the day on Friday. A crossover on gold on the 2-day chart going down. Remember, gold was already in a confirmed down move on the weekly chart. So we now have a confirmed down move on the weekly and the 2-day chart. Now, how did we know this was going to occur? Well, remember how prescient our 4-hour chart is. If you had jumped in on that 4-hour chart sometime around, again, we didn't recommend you stay in through the election, but if you had jumped in, say even after the election on that 4-hour chart, we had the gold start somewhere, around 122. It's down now to 117. Amazing. I think the market closed around 117.08. So again, gold is really losing a lot of energy and moving down. Our 4-hour chart continues to be prescient. We just love that chart. So we'll just continue to see how low gold goes. Now, those of you who are talking about trades and purchasing gold when it's going down, we're not talking about gold itself. We're talking about an inverse gold fund. Whenever you see the market roll over, whether it's one of our indexes like the Qs, which represents the Nasdaq-100, the S&P 500, or even gold, they're inverse funds that move in the opposite direction of the underlying security or equity or commodity in the case of gold. You want to understand more about that, encourage you to go and listen to, again, on our channels, go and listen to Inverse Funds, How to Make Money When Markets Crash. We've got another great training on that. We appreciate you being with us. You appreciate what we do. We would love to hear from you. Go to chartingwealth.com, sign up for our newsletter. If you want to really help us out, go to iTunes. Sign up for, that is, subscribe to our daily podcast. Give us a 5-star rating. Say something nice about us. Also, go to our YouTube channel and subscribe. This is the first place we upload all of our new video podcasts. Thank you so much for listening to us. Let us hear from you at chartingwealth.com. God bless. Hope this week is great to you as you learn to read these stock charts.